I think silver is going to fail to deliver first. That'll spill over to gold the same day or the next day. And within 72 hours, markets will be completely dysfunctional if they're even open. Why would you buy a contract that can't deliver? And that's where we're headed, is toward a cash and carry market versus the futures markets that are fraudulent. They're going to be proven fraudulent. That's the bottom line. When they can't deliver, that proves they were a fraud. The reason gold and silver have been suppressed for all this time is because the U.S. Treasury had to be able to borrow basically unlimited amounts of money. And that's what this game is all about.
Silver is the Achilles heel of the entire financial system. I did that video more than a decade ago explaining that silver that's going to pull the trigger, not gold, and the reasons therein.
Yeah, this is, first and foremost, it's important to understand that gold and silver don't change. They don't go up and down. An ounce is an ounce. An ounce today is an ounce 100 years ago and will be an ounce 100 years from now. What's changing are the currencies. And I believe what you're looking at right now is this is the end of the fiat experiment. You're watching, and I warned people for many, many years, I always said, be careful what you wish for. You know, people are talking about $100, $200 silver, $5,000, $10,000 gold. And I always said, be careful what you wish for, because what kind of world are we going to live in under that scenario?
Said when you see that acceleration where it's saying your currency's dropped in half in 1 year, it's a wake-up call. And, you know, as harsh as that may sound to the general public that doesn't understand how these fiat systems lose control, they see it in the grocery store. You know, I don't know what the official number is, 17%. I know it's BS because I grocery shop, and I know it's probably, I would say, doubled. Some products have. Point being that people are seeing it, seeing the emperor with no clothes. The game is over. The jig is up. The finance ministers on high are going to do their best to manipulate interest rates and try to spur something that never works, printing their way out of this thing. And so the currencies are devaluing because game's over, really.
These are not traders coming in. These are buyers that are cash and carry. They're buying a metal. They're having it delivered to them because they understand that the currencies are devaluing and they're ultimately going to devalue to zero. So you either have gold, you either have silver, or you're not going to have wealth when this is all done. The end game would be a cash and carry market, and the paper game would evaporate. You've got Indians, you've got the Chinese. When they buy, they want the metal. And the problem is you can't print the metal. The metal doesn't exist. And that's where the severe shortage is showing right now. And that's where it's going to break, is in silver, not gold. Gold will follow. And if there was no such thing as silver, gold would ultimately break on its own. But silver is going to be the blasting cap.
The global financial system is at a breaking point. The explosive rise in gold and silver, framing it not as a typical bull market, but as the collapse of the 50-year fiat currency experiment. Currencies worldwide are devaluing to zero, forcing a historic shift from fraudulent paper futures contracts to a cash-and-carry physical metal market. They warn that unbacked derivatives and unlimited money printing have shattered confidence. The critical shortage is in silver, the Achilles heel of the system, as industrial demand collides with monetary panic.
I don't have it. Industry-wise, can't do business without it. So it's not a matter of price. It could be 1,000. Why not be in position? In many industries, it's not a matter of how much does it cost me. It's just going to cost me my business. So I need X amount of ounces. So these businesses are thinking in terms of how many ounces do I need for the next year or 2 years or 3 years? Oh, and what do we look forward to? We're going to build out AI centers. We're going to build out this many data centers. We're going to do this much electric car production or whatever. Let's look ahead. Oh, I need our current supply of silver plus 20% going out 3 years, or whatever it is. Very light walk, then a brisk walk, then a light jog, full jog, a light run, a full run, and an all-out sprint. And that's a metaphor for how fast this market moves to the upside. And as I said before, I think we're in maybe the light run right now.
The problem is investors sensing monetization are just going to dump treasuries. I've talked about this several times before, that if you look at the last easing cycle, rates went higher, market rates went higher. And here we are again, they're starting to cut again. And where are rates? Rates are slightly higher than where they cut rates a couple weeks ago. So it's the Fed losing control of the yield curve.
And then there's people that are catching on. Maybe they've watched Bill for 3 years but never took action, and now they are motivated. So in those cases, I'd say dollar cost average. If silver goes from 70 to 200 and you don't want to buy it at 70, but you don't have any, you better, because if you don't have metal or real money, who knows how it's going to end.
Whatever you don't want to lose. Now, add that on top of Richard Russell's famous quote of, in the end, the winner is going to be who lost the least. I would continue to definitely overweight silver, just because the ratio, even at, what is it now, 63, 64, down from 120. So from that 120, silver's already double the performance of gold. But I think you're going to see a silver to gold ratio probably 20, 25, maybe lower, who knows. But silver is undervalued to gold. It can't default, just like gold can't default. So I would pick the cheaper, on a relative basis, I would pick the cheaper of the two, and understand that, yes, it takes, for big money, you got to have an awful lot of storage space. But for the average person, if you want 100% silver, I don't have a problem with that, because you may end up using it to live on for, 2 weeks, maybe more than a couple months.
This isn't just an investment trend. It's a systemic failure where credit markets could freeze, and only physical gold and silver will preserve wealth. The endgame is a forced remonetization of metals, with the current price surge being just the beginning of a parabolic move. Subscribe to Fine Metals for future updates.
And of course, I set them up. But the insatiable demands coming from India and China primarily, and this is mostly industrial demand, although in Hong Kong, if you look at this King Kong 888, I think it is, Eric Young, he's showing you that a lot of wealthy Asians are coming in and buying, I would say boatloads of silver, but substantial amounts. North America, net sellers; Asia, net buyers, primarily, I would say, the industrial side.
What about you, Bill? What are you seeing on your side of the fence there in terms of people's interest in gold and silver?
Yeah, you're definitely seeing selling in North America. Retail is definitely selling. You've seen. I think what you're looking at is the economy's nowhere near as good as the official government statistics. There's no money on the streets, and people are raising money by liquidating metal just to live. Prior to, let's say, 2005, the United States was the game. But now it's the entire world, and the United States is not leading as far as purchasing gold and silver.
They buy. Basically, the rest of the world is fed up with our dollar dominance, and that means the buyer of last resort is the Fed. So they are going to print until the market wakes up and says, "Wait a minute, this currency is worthless." Now, again, I want to be on record that I don't think it's going to absolute zero, but the perception that it's getting there quickly is already in play, and there'll be more and more momentum in that mean. And as that takes hold, you may see much further acceleration than we've already seen in these metals. I mean, for an example, if we doubled this year for round numbers in silver and platinum market, maybe they'll go up threefold next year. I'm not predicting that. I'm just trying to give you the idea of when we hit that panic manic phase. This will look like a light run. when it becomes an all-out sprint, you're really going to see fireworks. And I think we've probably got another year or so to maybe where the new system comes in, the digital euro, the Amero, who knows? I mean, I think I don't know the exact number. I think it's 190 countries in the world, like 163 are making digital currencies. What does that tell you?
Yeah, you broke up somewhat. I didn't catch the whole question, but yeah, the metals have run big time. But all you have to do is look at a chart. I mean, you could look at you could have been a German in 1920 and said, the price of gold and the price of silver is crazy.
Yeah.
But what happened 3 years later? And one thing that very few people are talking about, and people used to talk about quite a bit, was derivatives. The problem with the system today is that everything is financialized, everything is derivatized. And I mean, you're talking about over $2 quadrillion worth of derivatives. And all you have to do is get one market that goes offside, and that'll spill over to all markets. And I have posited for at least 10 years that I thought, because silver is the smallest market and the most suppressed, it's my thought that silver is the fuse to the derivative time bomb. I think silver is going to fail to deliver first. That'll spill over to gold the same day or the next day. And within 72 hours, markets will be completely dysfunctional if they're even open.
Yeah, I'm looking at the market cap right now of silver. Silver sitting at $3.8 trillion market cap. It just recently overtook Alphabet, Google.
So yeah, okay, so you're a new investor, you're panicky. We're in a panic mode. You call up Bill. Hey, Bill, I want to buy some silver. Bill says, well, I've got some Numi coins. That's it. What do you mean? There's nothing. I don't have anything to sell you. Well, what do you have? Well, I got a little bit of platinum. All right, I'll take it. So all four metals will move in unison at some point, which they're doing right now, as we all know. And then as far as what the miners will do, well, the miners lag because it's the way the stock market works. And stocks are based on earnings. And these stocks are priced like gold's still worth $3,000 the ounce, not $4,400. And the silver stocks are priced as if silver's at 35, not 70. So there's a long ways for these mining stocks to go higher. And then, of course, again, in the manic mode, people that are late to the party will look for the cheapest gold and silver stocks they can find. And unfortunately, it's been my very seasoned experience being in this industry for so long that a lot of charlatans will come out with a lot of news pasture and a really great story and a great website and AI clone talking about the merits of this news pasture. And they're going to discover more gold than what's in all of Australia, and people buy it because it's 12 cents. And just the buying pressure will take it to $1.20, and everyone will think they did a wonderful thing, except it was a big lie from the get-go. And I'm sorry to say that about our industry, but it does take place. They're not our industry. Let's just say it's grifters that take advantage of these things, and they do it in all sectors, not just the mining sector, although the mining sector seems to be one of the worst when things really get rolling. Most people don't want to think about it, but it's true. Look at just real quick to go down the rabbit hole a little bit. Look at the normal car dealer. You think all those cars that are on his lot are paid for? No, he's on credit. He's got to borrow money to keep that inventory on there. And every week that goes by or month that goes by, he's got to pay the bank or to finance those cars. So it's kind of what I said about the silver market on the wholesale side. So it's a mess, and it's going to continue to be printed away until perhaps the currency fails, meaning we just don't trust this stuff anymore. And the metals are showing us that. We're not trusting this stuff anymore.
The way people try to frame it is, and maybe it's true, maybe it is true, but it's being framed as the bankers losing control of gold and silver. Are they really losing control? Or is this part of, or do they stand to benefit in some weird way from rising gold and silver prices? I'll let Bill answer afterwards. Go ahead.
I'll jump in. I mean, I've said over and over again that the banks have been buying gold hand over fist. There's a reason for That's the money of last resort. When all else fails, if you have the lion's share of the gold, they can restart with what's always happened in the past. Fiat fails, go to gold standard. Fiat fails, go to gold standard. So they have that capability. But again, will that be what they want to implement? I say no. They'll try something just digitally first with some kind of meme coin, and I'm not being funny. And if that fails, then they've got the gold to back it up. That's how I see it.
What do you think, Bill? Are they letting gold and silver rise, or are they really losing control? Is this real, or is this part of some plan? Bill?
Yeah, no, I think the powers that be are definitely losing control. If you look at a chart of gold, when did it start rising? It started rising the day after Biden administration sequestered the 300 billion of Russian treasuries
Exactly.
that basically were stolen from them. And it became a bandwagon of nations joining the BRICS. And there's no question about it. Their countries are bailing out of treasuries, and they're using those funds to buy gold. And the reason they're doing that is they're looking at their balance sheet and they're saying, oh, well, we're 60, 70% in treasuries. What happens if the treasury market gets smoked? What happens if the U.S. Treasury doesn't like us and takes the treasuries? So what they're doing is they're putting something on their balance sheet that cannot bankrupt. It's the only gold and silver, the only two monies on the planet that cannot default. So they're putting a default free asset on their balance sheet that will be valued much, much, much higher in the event of a treasury default or more treasury confiscations, a break in confidence, whatever. But that's what they're doing, is they're putting gold on their balance sheets because they're going to need something to fill the black hole that treasuries will become.